Hey guys, welcome back to the Capital Mindset Show. Today's going to be, kind of like, I don't know even where to begin. So you guys have, at least if you guys have been watching the channel for at least over a month, you guys know that I was promising doing videos on cryptocurrencies, particularly the systems, and explaining to people because I found that there was a lack of information out there. Just because there's a lot of people getting involved in this stuff that they generally don't know what it is that they own, and it's exciting, it's new, and I was doing the research, and you guys know because I've been talking about making the video at some point, and then I was putting in the work to try to kind of help and fully explain these different systems. Now, the one in particular that we're talking about today is Terra or Luna, and I want to start off by almost like an apology, but also I also have to understand that I cannot cover everything all the time at the right time. Okay, so the value of this video is now severely reduced, and if you guys are on the Discord community, I was already kind of complaining about this because I wanted to bring out this video when the prices were higher, because it would have been more valuable if whoever seen it, if we could just affect one person who kind of didn't understand what they owned, but then would at least more or less, I guess, understand what it is that they were buying and understand the risks, and perhaps maybe even, save them from losing their shirt. And it's kind of personal to me as well because I had a close friend, and then they had a decent chunk of change in this asset, I guess you want to call it that. And I'll kind of share this with you guys. This is on Coinbase. So this is Terra Luna, right? So Terra is really part of the ecosystem that Luna is a part of. So Terra, as I'll actually show you guys here, and try to explain this. So I think this image is useful. And again, I'm going to be oversimplifying it because there's no real point in going as deep as I probably was going to go in the original intention of the video. But you guys can probably leave this video kind of having a grasp of what this was at the end of the day and why it was so dangerous. So this is the Terra system. And in here you have a lot of these symbols. So some of you who are familiar with cryptocurrencies probably know some of these. These are some of the stable coins that exist within the system. I think one of them is the Anchor protocol. The other ones, I think this one's Luna over here. I could be wrong on that, but so these are the different coins, you could say, that's within the system. You could see the Ethereum network, Solana network, etc., BlockFi, or whatever that is. I forgot what that one is. But so this is the Terra network. Luna served as a stabilizer to this network. And if you read the white papers of Terra, of Luna Terra, you would have kind of come out of there with more questions than answers probably, and that's actually what happened. That's why I delayed the video so much. So there was not only that, there was a decent amount of leverage within the system, not a tremendous amount, but enough for it to be a problem. And so there was something called the Anchor protocol, which it was a system, and I had this whole chart laid out. If you see what I see right here, it's basically like a whiteboard with all these lines and stuff. But basically, people were going through a bunch of loops to kind of generate some passive income. At least that's how they saw it. And there's a difference between what we need to understand is proof of stake and proof of work. So this system kind of operates on a proof of stake. And for those of you, so I'll kind of explain these things in layman's terms. A proof of stake means the more you have, the more probable it is for you to get more of it. All right. And then proof of work is what you traditionally think of with crypto mining. You have the computer sitting around and it's working. Okay. That's proof of work. Proof of stake, you kind of just hold it. So there was this massive system, involving crypto.com. We call this, again, the Anchor protocol. And so there was this complicated system where you would put money into something like crypto.com. You would buy Luna Terra. Then you would actually put this into another system. You would get UST coin, okay, which is part of the Terra system. UST is one of those stable coins that you see there. And then you would actually get interest. You would stake it into the system. and you would get anchor coins. So anchor coins is how you would then transfer it back and get more Luna, and then you would repeat this process over and over and over and over again. And you would ideally, this was the idea of users, was to generate some passive income, some interest, high interest profiting, right? Okay, so what happened? So Terra or Luna is designed, and let's go back to the price, is designed to stabilize the Terra system. And they say so in the white paper, and most people probably didn't even read the white paper. So in times of expansion of the Terra system, the actual count of Luna decreases. But in the opposite, in the reverse, in the contraction of the Terra system, and again, I'm simplifying things. If you look at the white paper, and I'll probably pull up the white paper and kind of go over some of the formulas with you, but I'm trying to put it in layman's terms. As the Terra system contracts, Luna actually increases in quantity, okay? And remember that all these things, they don't have a baseline value. And if you are newer to the markets and, you know, you're not understanding why it is something like this has any value whatsoever. Well, let's say, what's the difference between a stock and, or like, let's say Apple stock, and let's say Luna, for example. Well, Luna doesn't produce cash flow. So if any of you hear someone say a cryptocurrency, a currency is an asset, it's not, okay? It's not. For the perspective of an investment, it's not. And in accounting terms, currency is an asset because it can be used to derive some semblance of value into the future, and it's a highly liquid asset. Now, with regarding investing, currency is not an asset. It does not produce value. It is a store of value or a representation of value, and that's if it's a currency. But you do not buy a currency with the intention of generating value, which is a lot of what people were doing when buying these things. And this is kind of extrapolating from here and saying, you know, all these cryptocurrencies. You check out the Capital Mindset channel. I've really only talked about cryptocurrencies very briefly. I mentioned some of these things in the live streams. I have a single dedicated video, and perhaps if I did more crypto videos, I would grow more because those videos get more views. But there's a single crypto video, and all it's saying is that it's talking about the Bitcoin network, the Bitcoin system, and why I don't own any. I am a sideline cheerleader. That's what I call myself, a sideline cheerleader for something akin to Bitcoin, somewhat winning, okay, winning out. But I don't know if it will. And so I've always been very clear about that. But something like this is very complicated. And the majority of people investing, and again, I'm very upset with myself because I did not do this video I was sitting on the work, on the research. Now basically all the research kind of thrown away. This video is coming out late. It's not really going to help anyone. It's just going to basically say, well, you lost your shirt. This is why you lost your shirt. It's not going to say, be careful, you're going to lose your shirt. That was the original desire that I wanted this video to have an impact on. So because again, that is the mission of Capital Mindset, and I can guarantee I'm pretty upset. I'm pretty upset with myself in that regard. And yeah, I mean, I did have a conversation with that friend, and there's another one that, you know, a mutual friend between us, I guess, or not between us, but a mutual friend of theirs is, you know, they lost $650,000 in this thing, around there. And, you know, that person, you know, probably going to struggle to pay rent, and, you know, because it went up drastically. You can see that at the highs, you know, from way down here, it went up all the way to $116. And around here, you know, some of the people investing, it's a difficult thing to let go of it, to take profits, to understand that you got lucky in a system. And not understanding what you own can be the detriment to you. And, you know, well, and this video, by the way, is not going to be talking about Coinbase or Voyager, which, again, the research is basically done for those. And they will have their day in the sun. I've already been having discussions in the Discord community regarding these two brokerages. And to be specific, I've been having it in the deluxe part of the Discord community. Some back and forth, some little tidbits here and there about specifically Voyager. Coinbase, I'll say as like a spoiler for the video, Coinbase is the less egregious of the two. The other ones are very egregious, and they will have their day in the sun. I will be careful on how I say things because of legal reasons. But you guys, I'm telling you now, read between the lines when I do that video. Read between the lines. So yeah, we'll say that. All right. Okay, so I'm going to kind of showcase the white paper, what you kind of could have looked out for. And again, the reason why I'm upset with myself is because the research was done. The research was done enough. And it could have at least been a quick video going over the white paper for everyone. And, again, my channel's small. It wouldn't have that much of an impact. It's not like Meet Kevin. If Meet Kevin were to say this, it would have a much greater impact, which, is upsetting because the guy's not doing it, and it's almost like a sense of responsibility. But again, I'm maybe being a little too hard on myself, and if you can see, I'm kind of vividly upset. My wife was like, you can't, talk about everything. I understand that, but I can't help it with that. So I'm going to show you guys the white paper. We'll go over some of the stuff. Okay, so right here we're on the white paper, and basically you can kind of see, if you can all read this yourself, but I won't spend too much time because I also want to talk about the stablecoin fiasco that occurred, because I probably should have mentioned that in the beginning of this video. But you can kind of see here, this is the transaction volume. So this is the first one. So what it explains down here basically is the transaction volume is linked to the burn rate of Luna, because Luna is a support coin, you could say. I'm calling it a support coin, but there's actually a technical term. In fact, let me quickly find it and I'll let you know. All right, the specific term is balancing token. So that's what Luna is. Luna is a balancing token. And you can see this is all in theory, by the way, so this other stuff. So this is the mining rewards. So mining rewards is kind of correlated between this and basically the burn rate. Then yeah, this is the burn rate. So the burn rate actually starts to decline depending on the behavior. So the fees and the burn rate are also correlated. They kind of explain this here. So unit mining rewards and such. So basically what you have to understand, layman terms, this is connected to the broader Terra system, this guy over here. And so if this guy starts to suffer, then Luna is there to kind of save it, protect it, or whatever, because that's what they are. They're designed like a support coin. I'm just going to call it support coin. I know that it's technically whatever it was called, but support coin is what I'll call it. And so what happened? So we know that the stable coin the Terra uses in the Terra system was decoupled for a second with the US dollar, because it's an algorithmic stable coin. And so in layman's terms, that's a problem because the system itself relies on the use of these stable coins to transact. As I discussed very briefly with the Anchor protocol, the Anchor protocol actually uses stuff like the stablecoin, the Terra stablecoin. So if that's decoupled, the whole system begins to fall apart fairly rapidly. And again, when you understand that when the system falls apart very rapidly, that's where Luna comes in and actually just tries to support that. So you have a culmination of a bunch of factors and why that can lead to something like this. Because if you actually took a look at Anchor at the time, and this is the upsetting part, because if I were to show you now, this story is different because the information was back then. So if those of you who are involved in this, you probably remember, because on the broker platform Anchor, it tells you the amount of leverage in the system. So now the leverage is different because of all the margin calls that occurred. Remember, what are we currently in right now? And this is a theme of this channel. We are in the liquidity crunch. We're like knee deep in this thing. And so that actually culminates into a variety of aspects within the market, and the crypto market is not immune from this. A lot of these margin calls you can expect to happen very rapidly. So with the amount of leverage, which actually in reality, and you can make this argument, wasn't that much, but it was enough. It was enough to be a problem. And so when you have, for example, let's say, I think the margin was, I'll make it up because I don't know off the top of my head, but it was significantly more than where it is now, obviously, because of all the margin calls, so it's a reduction. But back then, I think it was like, I don't know, maybe like close to like 20-ish%, maybe a little bit less, maybe a little bit more. And so that might sound like a little bit of margin, but it is significant because when things get bad, they can get bad very quickly. And then that can foster a panic. And we have to remember, these coins don't produce anything. So then the desire of someone to hold them, it doesn't make too much sense in the case of a liquidity crunch. And again, the concept, a lot of people who invest in these cryptocurrencies are doing so with the intention to, quote unquote, exit the dollar, because the dollar is going to lose value anyway. Well, in this case, the Terra, well, Luna, I keep saying Terra, but Luna lost a lot of value. It didn't hold any value. And the thing is, people are confusing currency with assets. And that's kind of a broader topic. I'm kind of getting into the meta of everything, but people are confusing currency with assets, and it's unfortunate. So I mean, that pretty much kind of sums it up. I guess you guys could ask questions if you guys have any questions, but this is as long as the video is really going to be. There's not really much else to say. The kind of summary is I apologize for not making this video earlier. I've been, hinting at it, talking about some of these things briefly, and always saying, no, don't worry, I'm not going to really get into it because I'm going to make a video, dedicated video to it. And now I have to restart and I guess do research on a different system because this system kind of collapsed. So yes, my sincerest apologies to my audience for, again, not putting out this information earlier. I mean, I guess, but I can't expect everyone to watch every minute of every live stream. I can't expect that of everyone, but I just briefly talked about it. I never got to really delve deep, which is unfortunate because I was having fun. I actually had a lot of fun researching this. I don't have fun knowing that people lost their shirt on this coin, but it is what it is. Sometimes we're gonna miss it. All right, guys. Thank you guys so much for watching. I hope you guys have a great one. Yeah, so I'll see you guys in the next one on a lighter note. All right, guys. Bye.